I find that the harder I work, the more luck I seem to have. Thomas Jefferson. My friends, the work here is not that hard. What's hard is finding the time every day. 10 to 15 minutes, though. That's all we ask, but you've got to have that consistency. And besides, it's loads of fun. Unless your lungs are giving you a hard time, which mine are right now. But I will try to keep the coughing at a minimum for you, even when I'm sick. Even when I am busy, I still find the time. If I can do it, I know you can do it. It is simply a priority question. Are you going to prioritize this over other things? Because I encourage you to do so, because if you do, you will at some point become a charting master. It will happen. It may take a while, but don't worry about that. You'll make up for all the time you ever spent learning. 10 to 15 minutes each and every day. Let's jump into these charts. We see stocks and bonds are up, gold and Bitcoin down. Oh, and by the way, Patreon members, we don't have many weekly vertical crossovers this week. There are a few. Let me see. Only 9, 3 down and 6 up. But I'll share those with you as we always do on Thursdays. Also, we'll be emailing you the links that have already been up on Patreon for a while to the videos of the 3-wave trades. Those are the liquid stocks with liquid options, liquid ETFs with liquid options that we curate from our list for you every week, and charting cryptos, commodities, and currencies. Everybody else realize we will be releasing charting cryptos, commodities, and currencies tomorrow after the close of the markets. Let's go. What do we see going on with the S&P 500? Up 0.20% for the day. This market that just keeps going up, 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 up. Will it go up forever? Of course not. About the time everybody thinks it will go up forever, it's sort of like I joke about gold. You start seeing all the gold commercials, how you should buy gold. About the time gold starts to roll over and go down, it never fails. But when everybody thinks the market's going to go up forever, because again, we printed money backed by nothing, it'll never end. The market will just keep clicking up, clicking up, clicking up. About the time everybody thinks that I need to just put everything in there and leave it forever. That's what I hear over and over is, oh, the market, it goes up on average, blah, blah, blah. Yeah, average. That also means that it goes down. And at some point, there's going to be a crash, and it's going to be big. Now, is it next week? Is it tomorrow? Is it 2 years from now? I don't know. But the reason I encourage you to train, to practice, to learn is so that when it does crash, hopefully you have invested enough time and energy in learning that you will know what to do. We see here as we have finished drawing the 2-day candle, nice big up 2-day candle. 2-day and the half-day are above the weekly trend line. We can see where over the last 2 days, we've been right about the same spot. So again, may just be digesting that gain that popped up on Wednesday morning. Maybe it'll pop up higher. Maybe the market's coming to an end. Can't tell you it's going to do that because I don't know. I do see there's not a whole lot of volume and conviction here over the last many, many weeks as it's just continued to tick up. It is the summertime. Remember, sell in May and go away, live to trade another day. We're in the summertime trading zone where there's less volume. And of course, there can be much more volatility. That's where we are on the S&P. Nice up week. Another one. What about the NASDAQ 100? This is the one where we made the trade. Why? Because we had the interim low with higher than average volume, and then the turnaround with our favorite telltale sign, a spinning top, whether it's a crossover going down or a crossover going up like here, and we had average volume and things took off and just kept on hammering up. Nice week. And again, the NASDAQ 100 has continued to outpace the S&P 500. I'd tell you the reason is because it was a better turnaround. It was stronger. We did not pull the trigger on this one. We didn't quite have average volume here. We had more like a doji than a green spinning top on the NASDAQ. So we took the NASDAQ, and of course for the day up 0.54%, and it has been a cleaner, nicer, stronger up move on the NASDAQ 100. We are still long on both. Let's look at where things are on bonds. Bonds bounding up 1.47% for the day. And again, had 3 green candles. Then this week that most likely, I can't imagine this week not pulling you out of the trade and then reversing back over. We had nothing compelling to draw us into this up move. It was weak to start, floundered in the middle, but has started gaining. You know what you can do? You can look at this and say, gosh, what would I have done to have gotten into this trade? Because look, it's working. Yeah, it is in the end here. I would never have entered it, and we didn't, because there was not volume showing us a bottom. There was not volume turning around showing us an up move. I don't call a doji a bottom. It didn't go lower. It was a red doji. It wasn't a green spinning. I mean, again, there was nothing here that compelled me to get into this. I want sure bets. I want things that I have traded before and seen on the same chart that looked good to me and compelled me to want to get into it. Does that mean every time you see a certain pattern, it's going to work? Absolutely not. That's why the market's fun. It doesn't always work. That's when you have to rely on the rules that you set up for cutting your losses, letting your profits run. That's again why we use the 2-day ATR to set our profit and loss bands. If we lose one time the ATR, the average true range on the 2-day chart, we pull the trade. If we hit one time ATR, we sell half the trade and then we let the rest of it run. Simple rule, idiot simple. Could you modify that and do it better? Sure. You find a better way, do a better way. I'm just giving you a simple rule that we have used for years, and it works beautifully many times. So again, no rule do we have here that you have to stick to all the time. What's the rule? The rule is to do what works. And of course, the first rule in trading is don't lose money. Second rule in trading, don't lose money. Third rule in trading, make money. Now, let's see where we are on gold. Gold is down for the day, 0.82%, reverting 0.82%. Reverting to the mean is what I was attempting to say. We see the low last week was 211.54. This week, 212.26. We haven't hit that low yet because we had that day where things popped up on Wednesday morning in particular, pulling back a little Wednesday afternoon and then down on Thursday. Haven't hit the low that we saw last Friday. We'll see what Monday does. But again, a decently down day for gold, 0.82%. And again, no compelling reason to jump into this down move. We didn't have... The only thing that I know some of you did look at jumping into this down move was because we bounced off the ceiling a second time. That's what, whenever you see a purple line on our charts, it's either a ceiling or a floor. Floor is what things bounce off of going up. A ceiling's what things bounce off of going down. And of course, when you have a ceiling that holds, again, you can count on some down move when you have a bounce, typically, which is what we've seen happen here. It's what we saw happen before. It didn't happen very long, which wouldn't have made me super comfortable, excuse me, about riding this down move. However, as we pointed out to you several times, GDX, which I've been looking at a lot lately, we had a great move up when gold started moving up last time. Look at that. We had an interim low, and then we had a turnaround. Not my favorite kind of candle. I would have preferred a solid red down candle hitting the interim low, which we got close to right here. And then, of course, we did have a low with a red spinning top and a turnaround on a green up candle with higher than average volume on both, and then gold took off. Now, as we've seen things turn over, you can see where gold hit an interim high, another doji here, sort of like we saw the doji over here. Didn't have any volume with that, but then a red spinning top last week where we had higher than average volume. So we had average volume here at the interim high, a turnaround with higher than average volume, red down candle, and of course, down movement this week. Just showing you that sometimes when you can't find a move on one chart, you might look at a related chart that, again, like I like to look at with gold. And again, for those of you who pay attention to the charting cryptos, commodities, and currencies, tomorrow it's going to be released to the general public. I want you to particularly pay attention to what I talk about when we look at silver and silver going down. So that's gold. It is heading down. We had no compelling reason to jump into the down move, but it is down. What about HODL? That is the Bitcoin ETF, down again. And again, we've got it. It's gone from just a doji to a red doji, just trying to push through, sitting right on that weekly trend line. We can see where the 2-day has spun, two spinning tops has spun down through it. Of course, the half-day chart is below. And again, we're paying close to, don't have a lot of volume here, but Bitcoin hasn't been helping us see what's really going on with a lot of volume. One thing, let's check out. Just want to see if volume shows us anything on 24-hour-a-day Bitcoin. No, it really doesn't. I was hoping maybe there was something there, but we'll just continue to take a look at our ETF volume. But nothing heating up there. It does look like Bitcoin is losing some of its charm. And, we'll just continue to wait, watch, and see. Maybe Bitcoin's going to backtrack a while, but Friday's coming. We'll see what happens on Friday. Could change colors and bound up. Digest these up gains for 4 weeks and then continue. That is where we are, folks. We always appreciate you being with us. We always love to hear from you. cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.